Welcome, traders, to After Hours at TradersPost for Friday, February 27th, 2026. I'm one of your hosts, Peter Bad Guru Hartman, creative specialist at TradersPost, joined by Tom Hartman, also known as Sacred Prophet, prop firm payout Poppy. Um,
You almost got it out that time.
Here to break down the market madness. After Hours is your weekly look back for retail traders, where we break down what actually moved markets and how the cleanest trade setups played out or didn't. We hit the macro drivers when it matters behind the week in dollars, equities, and policy terms so that we have an idea of what to look for in the week ahead. After Hours is brought to you by Blue Sky, the best in class prop firm with same day activation, daily payouts, and no max restrictions. We'll tell you more about them later. Tom, how did your trading day go today?
You know what? Today was a fallow day, right? Sometimes you got to leave part of your field in fallow, or as you might know in French, jachère, where you don't till it. You let the field rest. You let the
Nobody
ground
knows.
heal, so
Uh-huh.
that when you, I don't know, was talking about warp and woof today, and people were like, "What are you talking about?" Mike said that my Canadian was showing, which was pretty funny.
Yeah, I think it was.
But sometimes not trading is the trade, right? It's
Mm-hmm.
4 trades I care about. That's full trend trading, partial trend, scalping, and no trade. And if I cannot trade, sometimes that's great. So after a rough week on the heels of a bad last Friday, I was like, you know what? Time to watch markets. What's great about that is that I can spend my time like making predictions and be like, okay, how are markets moving? How am I able to predict things when I'm not in it? And you know what? I'm just as good as what I'm trading. I mean, clearly that's not the problem, right? Clearly it's not the problem that I can't tell how the price should move and where it should go. So this is the thing, Peter,
Wait,
I
wait, wait,
want
wait.
to
What is the problem then?
exactly. This is exactly the thing that I want to try to in all the different after hours and all the future ones. What I want for people to know the most about is understanding market structure,
Mm-hmm.
understanding how price moves, and get beyond the narratives, get beyond the very short-term technical analysis, and really see how markets are moving. And so today there's two actual stories here that I wanted to talk about that I thought was absolutely fascinating over the last couple of weeks. One is the Jane Street saga, the whole thing about Jane Street, one of the largest financial firms that apparently has been accused, even in the court of law, of engineering the 2022 Bitcoin collapse and currently keeping the price of Bitcoin down, not where it should be 150,000 and growing, but down in the dumps where it is right now at below 70,000. Whew,
Really?
hard
Wait, whoa, whoa,
claim.
whoa, 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 whoa. What do you mean? They're one company could be the reason why they're keeping Bitcoin down?
Let's not get ahead of our skis here. We'll talk about that in a second.
All
The
right.
next story is NVIDIA. NVIDIA, who had, I mean, these earnings were great. You've never seen earnings as big and beautiful as this. Hey, you got to listen to me. These earnings, okay. I've seen
Trump,
earnings before.
Trump is this.
I've seen earnings before. No, sometimes he does this with his
No,
hands.
no, he
Sometimes he does
usually does
this.
that.
And we had a peak the drawdown here, 15% drop in a company that is the biggest market cap of the market, $1 trillion company, 8% of markets, and it fell. Who could have seen that coming? Oh, 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 we're going to talk about that in a second too. But then also, I want to start today with the trading, prop firm trading, which is the new kid on the block, right? Prop firm is the new meme coin, the new NFT. And I
Prop
thought
firm's got
today's
its collar
move,
popped. It's got its collar
that's right.
popped. It's looking real cool. Where's my backwards cap?
Yeah, it's got a little cut on one of its eyebrows over here, right? So it looks a little cool,
Baggy pants,
little,
and eerie.
a little Charlie Puth cut on his hair. Um, so I wanted to go over that today because we're talking market structure, and today was like a classic learning experience, and all the signs pointed to I should not be chopped up in this market, and I did not get chopped up in this market. So let's go
Mm.
ahead and head over to the charts
Whoa, no,
today.
wait. Hey, hang on. Gotta say hello to everybody who's watching. Hello, Trey out there. Yeah, 2 streams today. Every Friday, 2 streams. That's right. What's up to you? Good to see you. Good to see everybody out there who's lurking, who's watching. Glad that you're here. If you're willing, let us know, how did your trading week go? Did you do well? Did you not do well? Did you stay on the sidelines? Interested in knowing what is going on with you. We're about to break down the market and analyze these trades. And if you missed previous analysis, I highly recommend you go and check that out, because this aspect uh, um, of the content on After Hours is evergreen, right? You can go back at previous trades and you can still learn a lot from it. Now, yes, will you have to be putting up with hearing Tom's voice more and more? How annoying that sounds? Yeah,
You
you'll have
get
to
to
live
hear
with
Tom's
that.
voice.
You'll have to tolerate it, but it's worth it, kinda. Maybe.
I hate you, Peter. I just want to make sure that's on the record and that everyone knows.
All right, bro. All right. So you got to watch on the sidelines here today, which we got to see a version of Tom who, his emotions weren't in it. It was just pure looking at the charts. So
That's
now
right.
we're going to analyze it, and you're not going to have any of the feelings you had up or down, and we're going to get pure Tom analyzing the chart. So I'm looking forward to that.
That's right. Now we are going to go to. I think it's very useful for on the TradersPost platform. We do trade every day from Tuesday to Friday, 9:30 a.m. to 10:30 Eastern Standard Time, and we get to see a couple of people's different trading styles. But here, look, and after hours, this is my show. We're gonna do my trading style. All right, you got a better trading style. That's great. I don't want to hear about it. We're going to go
I want to
over
hear
my
about
trading style over here. Yeah. And so, and I'm going to show you what I'm seeing. And what I find useful about that is that if you have a different trading style, great. If this is complementary, fantastic. And if you see something useful, you can go ahead and use that to your heart's content. So here on my chart, these are my indicators for my secret profit indicators that I do have on my website, secretprofit.com. But the levels we're talking about, the things we're talking about here are things you can intuit yourself. So what we're just taking a quick look at over here is obviously RSI at the bottom, and then on the chart we have some plots and some lines. All right, so this is the last trading day for MNQ. All right, last trading day for MNQ. Now there's a pattern for MNQ that we, my brother and I, we like to trade, and that is at 6 o'clock. We like to take a trade when futures open in the direction of the the session VWAP and the overnight VWAP prices from the day before. So the day before, the markets closed with VWAP here on the NASDAQ at 25,107 and here at 25,056. Right? These were the session VWAPs and the overnight VWAP. And that sort of move happened yesterday. We had a little bit of a drop here, and then we rose up to near, well, first we did hit the initial session VWAP, and then we continued a little bit and we nearly hit the overnight VWAP. Now there's two things here I find very interesting. All right. It's my contention that the NASDAQ moves in certain time frames: the 15-minute, the 2 hour, the 1 day, and the 1 week. Those are the four levels that I pay attention to, four time frames I pay attention to when I'm intraday trading. And on this chart, you'll see the 2 hour VWAP levels represented by purple lines. Here we had a purple 2 hour VWAP level that was created from the day before, and that's exactly where the price came down to, literally to the wick down there before it bounced up. Where did it bounce up to? To the daily VWAP, pulled back to VWAP, and came back up to the next 2 hour level. All right. So when I see movements like this, when I see the market moving between these levels, I go, I can't ignore it. Look, it's moving exactly to the levels that I'm expecting. Now, there is this thing here that happens where the far VWAP, here we whiffed it. We missed it. We missed it. All right. And then from there, we had a big sell off from, what is it, 4 a.m. down to market open. Okay. Peter, what do I say at market open when uh, in the overnight we've missed one of the daily VWAP levels?
We have a likelihood that the market will want to go up and touch that level. The market is OCD. It doesn't like missed levels. It'll go up and touch it. From there, where it will go, not quite so sure, but it's got to go and touch that level. Got to touch it.
That's right. Sometimes it could wick it. Sometimes it could trend all the way up, but generally speaking, it wants to touch it. Now, it doesn't always. But if it is going to do it, it's most likely going to do it in the day that that level was created. So today. And if it doesn't happen that day, well, then it can meander around and all kinds of things can happen for it to get back to that point, but generally within that day. So my bias coming into today, I didn't care that in the overnight, the market dropped. What was this? 2%? Market dropped 1.2% in the overnight. The market dropped 1.2% in the overnight. I didn't care about that. Did I tell you, Peter? Oh, the market dropped. So, I'm nervous. It might go down. No. I
Mhm.
said, my bias is that we're going to go up towards the 25,107 level. And that's what happened for most of the day, right? We crawled back up. It didn't matter that the VWAPs were bearish. It didn't matter the ATR was super high, as evidenced by how many candles you're seeing here, like the wicks. Look at those wicks. This is porcupine territory here, Peter. Wicks all over the freaking place. Didn't matter. We moved our way back up. And did you notice, Peter, that where did we move? We move up. We move first in the morning from 9:30 up to this 2 hour level that was created the last 2 hour block. And then we continued sideways until we moved up to the next 2 hour level. The NASDAQ moves in time frames of 15-minute, 2 hour, 1 day, and 1 week. And the 2 hour is a very nice level to deal with when you're dealing with trades. If you have enough drawdown, if you have enough room, and if you like smaller moves, you can deal with the 15-minute. We're not going to take a look at that today, but if you went to the 15-minute chart, you'll also see that the price is moving on those 15-minute levels. So we got there. In fact, once this happened, Peter, and we had this drop off here, we had the sell off in the afternoon. I did not believe that we would, I thought there was a high likelihood that at some point we would trend back up towards 107. Again, these levels are acting as magnets. It's a magnet level. It's calling the price, right? And the next major level down is like down here, the weekly level of 23,960. So I'm like, okay, this is nearby. We're going to attract the price. And that's exactly what happened. Where did it happen? Around 245 and 3. So basically from 3, we had this happening. Why? Because options stop trading. Positions need to be covered. If people were short during the day or what have you, they need to cover these positions in order to close their position. They don't want to hold it into the weekend. All kinds of dynamics come into play where the price might reverse, and a reverse here back up towards that 107 level. Now
Question.
we hit resistance at the weekly level over here. This is the weekly VWAP that we hit resistance at, and we've been basically oscillating around that the entire day. So it makes sense that that's where the price came back and stopped. Yeah, go ahead.
You talk about these levels, overnight VWAP, session VWAP, 2 hour VWAP. Um, are there any free indicators that will give you those levels?
Absolutely. If you go into the TradersPost library and you go into your account under account indicators, there's an indicator there called Midnight VWAP that you can use to place on your chart. So a Midnight VWAP is
I'll pull it up.
let me show it to you quickly on my chart.
Sorry.
So just go back to my screen
All right.
and I'll toss on Midnight VWAP over here. There's a free indicator that you guys can get. It's available inside of TraderSource backend. And let me just go down to the 15-minute, and you're going to see that it's going to plot the overnight VWAP. This is this blue line that turns into this other line, and then the session VWAP that starts at the session. If you want to change those session times, you can change the session times through here. So basically, I'm setting here that the midnight session, I'm going from 5 p.m. to 9:30, and then I'm going from 9:30 to 6 to 4 o'clock. You can change these times to whatever you want in order to get VWAPs for different things. Some people like going from midnight to midnight. Some people like going from 9:30 to 9:30. Some people only want VWAP for part of the session. Some people want to include the London, whatever. You can make these levels what you want.
So you go to your dashboard on TradersPost, you click on account, you go to indicators on the left, and the midnight VWAP is right here, right there, free to use, available to you.
That's right. So that to me was a textbook set up today for choppy sideways action because of this whiff. This whiff to me has been the sign that, hey, we're going to revert. I don't know how things are going to go. We might revert, and then obviously we look at the option space in order to get a sense of, hey, how far can we go? how big of a move we can have. But for that, we're going to talk about that in a second as we touch on the NVIDIA story. But before we get there, we'll just take a quick word from our sponsor.
This episode is brought to you by Blue Sky. If you're looking for a prop firm built for real traders and that's automation friendly, meet Blue Sky. And when you pair it with TradersPost, it just clicks. Blue Sky is a best-in-class prop firm with same-day activation, daily payouts, and no max restrictions. They also offer launch plans starting at $49. And if you're a first-time subscriber, use coupon code WELCOME26 to get 50% off your launch plan. Get funded with Blue Sky, execute with TradersPost. Sign up today at bluesky.pro, that's BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management. Hello, folks. Welcome back. I want to remind you that there's a lot that's going on here at TradersPost. Like and subscribe if you like this kind of content. It helps us to know what to focus on, and it helps the other people in the universe find our TradersPost channel. Good to see you, Train the Chat. Good to see you, Sander Azul. I also want to remind everybody about, well, Tom, you talked about the 5 o'clock show, but we don't have one today.
No, I just wanted to let people know that if you're interested in sort of like market analysis for, especially in the frame of trading prop firms, trading crypto futures, what have you, and you're interested in VWAP trading, Peter and I, we do go over the day's trades Monday to Thursday at 5 o'clock on the Sacred Profit channel, the YouTube channel. So you can always feel free to go there. And of course, you could come at Price Action Live Tuesdays to Fridays, 9:30 a.m. in order to see me, Peter, and Mike trade live, again, with the same sort of ideas. Mike also likes trading across with VWAP, and he has a completely different style. And you get to see, hey, how this actually works in the wild, what works, what doesn't work, and where the home runs are. So if you're interested in that, that's available. All right, Peter.
Yeah.
My chart, NVIDIA. Look at that drop.
Whoa.
This, my sir, peak to trough we've had. What was this? If you take a look over the last, yeah, peak to trough here, we're down 16%, and just over the last couple of days, we're down peak to trough 10%. All right, that has been a pretty significant drop. For here's the crazy thing. NVIDIA crushed earnings.
Right.
Their earnings report was fantastic. I mean, you're talking about $1 trillion company. You're talking about massive growth. You're talking about novel industry, AI, darling. It's the top stock. It's 8% of the S&P, beats and falls 10%. Wow. Incredible. Now, I just want to go ahead and
It's like a Teller
listen
concert. It's like a, actually, what reminds me is the NBA All-Star game that happened recently where the stadium was half full. You're like, how is the All-Star NBA game half full? That's crazy.
I do want to play a quick video here. I listened to a lot of takes. I thought this one was particularly good. Give me 1 second here. And this is a video from Ricky Gutierrez on YouTube, who talked about NVIDIA crashing after earnings. I really like the way that he talks about this in the sense of where he would buy NVIDIA. So let's just take a quick listen for a minute or two.
Did not see NVIDIA as of right now is down to lows of 186. That is at one point at hitting highs of 203. So actually, from the highs that we hit after it did beat earnings to the current lows as of right now, 727 in California, it is down 8.5% from the highs, or 4.7% from the previous close to the current price as of right now. Now, what exactly is going on? Well, let me go ahead and make sure that you guys understand. NVIDIA killed earnings. Its earnings per share was $1.62. Its revenue was $68 billion. The EPS surprise, which is the earnings per share, is 6.58%, and the revenue is 3.87%. But remember, in yesterday's video, we really talked about NVIDIA is always expected to beat earnings. It's the most valuable company that's publicly traded. Every company that is aspiring always likes to compare itself to what NVIDIA is now today. Again, let me remind you, they're not. NVIDIA is a very unique company where they really are at the core or at the forefront of this AI revolution. Unfortunately, it has been a constant theme in recent earnings, not just with NVIDIA, but with Meta, with Google, with Microsoft. They all killed it with earnings. These are very valuable companies that are not only reporting very impressive earnings, but they're exceeding expectation often. Guess what? It still doesn't change the fact that maybe they are overvalued as of right now, right? There are some uncertainties that are injecting themselves into the market with what's going on with Trump and these current tariffs, the tensions between Iran and the US. As of right now, the question a lot of people have, especially when it comes down, it's one of the, are these big billion-dollar, or it's not that all Microsoft, Google spending billions and billions of dollars aggressively investing into this AI revolution, and it's not going to pay off for everyone, or at least not all of them. So which one is going to take the hit? Again, although there is a slight retracement of 4 or 5%.
All right. Well, he goes on to talk in the video. It's an interesting one. You can go check it out. He talks about, I don't care if NVIDIA could be $300 per share. I think he thinks that there's going to be a correction in the markets. And if there's going to be a correction in markets writ large, why buy it now? You might as well wait for that correction to happen to get in. Like, why buy it now? It doesn't make any sense. Unless you're like, I see no reason why the market will go down, and this should just keep going up from here. Why buy high to sell higher if you think you're gonna go down? So yeah, it's a great stock. Just wait till the market collapses and then get it then. So I thought it was pretty interesting. But the thing I wanted to add on top of that is this post from Imran Alaka from Options Insight. Now he talked. Let me just switch this a second.
While you're switching that, I am concerned though that all of our eggs are in that NVIDIA basket. There are new developments that could actually shake things up to the point where NVIDIA is not the top dog anymore. You have TPUs from Google, right?
Right.
There may be breakthroughs in how efficient you can be with the cards that already exist, right? So if the cards that already exist becomes 10 times more efficient, 100 times more efficient, well, then are people really chasing and putting on these big orders anymore? I don't know. So I don't know.
There's also the issue
There's so much
of
uncertainty. Go ahead.
there are components necessary, raw materials necessary to make the chips, and each one of them, if there's any problem with any one of them, the entire supply stops.
There you go. And does NVIDIA depend on Taiwan?
I don't know about Taiwan, but it's more about the raw materials.
Raw materials. So yeah, there's so many uncertainties in the flow of this whole thing with NVIDIA that I'm not sure that it's this like Goliath that is now a fundamental, a staple in the AI space. Anything could change. I know Tesla is creating. I believe they started to create their own chips too, in order because
Why not?
when you're married, yeah, because when Apple has demonstrated when you marry software with hardware, when you control the full stack, then you can be more, far more impactful with the hardware that you have. So I don't know. I'm not so sure that, oh, just wait till it comes down so that you can buy it back up. Do we know if it's going to go back up? Now, if it goes down, are you not going to buy? No, I don't. I don't think so. I don't think uncertainties are going to stop you from getting in. But I do wonder what the future holds, and I think I'm not the only one.
Well, I care about market positioning. I've learned
Right.
the hard way that narrative means nothing at all. What's that line? Markets are a voting machine in the short term and a weighing machine in the long term. So this is a post from Imran Laka from Options Insight. He's one of my go-to guys for when it comes to options, and he says this. He said this on the 25th of February. So this is before earnings, I believe. NVIDIA is going to crush earnings. Everyone knows this. That's the problem. None of us are going to be surprised by good numbers. The question isn't whether they beat. It's the second derivative. How much is already priced in? How many people already hold the stock? Excuse me. Semis have outperformed software. The stock has been rallying into the print. Ownership is crowded. And options players aren't piling into calls ahead of the report, which means the options players aren't buying bets that the stock will go up. right? This is one of those things that leads to this gamma effect that if prices go up, they could go up even higher, right? Because if they go up, then the calls return more money than if you had the stock. So if people aren't betting that, they're not taking these second derivative bets, then you don't have that kindling in order to cause the price to catapult higher.
Mhm.
That part matters. When there's no aggressive call buying into an earnings event on one of the most liquid names in the world, it tells you something about where risk appetite actually sits. Look at the rest of the Mag 7. Most reported well. Market had a knee jerk higher, then faded. Same setup here. Mean reversion after the dust settles looks sensible, even if the numbers are quite good. One caveat: if everyone de-risks before the report, the crowded ownership thesis weakens. Structure over conviction always. So the structure here is saying, hey, buying NVIDIA right before earnings, expecting it's going to go up 10%, it's not there. You need you need people on. You need buyers, sellers, forced buyers, and forced sellers. And if there are no forced buyers, then you got to rely wholly on narrative. And then you say, well, the narrative is they're going to beat, but we already know that. So where's going to be the thing that causes everyone to go in when it's news everyone expects?
But what was the thing that caused it to go down then? Why wasn't it just flat?
That is a question that I suspect, and I don't have a lot of information about it, but I'm suspecting this. There are rumblings that the AI boom is causing hidden unemployment. Let me go ahead and show you this post here from, this is a post from Akash Gupta on February 25th, who talks a little bit about this. He's commented on a post from Nicolas Charrière, but let's see here. So the idea here is just this is about AI specifically, and it's talking about the amount of software that's being outputted now. It's just a massive amount of software, apps, code, GitHub, whatever that's being outputted. All right. So let me just read this to you. It's a little bit of a trek, but super interesting.
If you want me to
So he
read
goes.
it, I can. If you want.
So let's go ahead, Peter. Give me a read on this.
When building costs drop 90%, but distribution costs stay flat, you get a gold rush where everyone digs and nobody sells. That's what this chart actually shows. New websites up 40%, iOS apps up 50%, GitHub pushes up 35%. Everyone read barrier to building disappeared and heard opportunity. Everyone read this and heard opportunity. The correct read is that 557,000 new apps hit the App Store last year, a 24% spike, flooding a discovery channel that was already dead on arrival. 90% of senior mobile professionals surveyed said organic App Store discovery was effectively over before this wave even hit. Half of all App Store searches are just people typing in brands they already know. The supply side hockey sticked. The demand side didn't move. This is why tech layoffs doubled to 264,000 in 2025, while code output simultaneously exploded. Companies don't need more builders. They need people who can get the thing in front of someone who will pay for it. Distribution, positioning, audience, brand, the functions that never got the AI productivity boost. Nicholas nails the conclusion that taste and knowing what to build are what matters now. But taste is only half of it. You only need the channel. The unsexy,
You also need the channel.
You also need the channel, rather. The unsexy reality is that a mediocre app with 100,000 newsletter subscribers will outperform a beautiful app with zero distribution every single time. The apps winning in 2026 aren't the best built ones, they're the ones attached to someone who already has an audience. Oh boy. Building software used to be the moat. Now, building software is the commodity. Oh, that is sending chills. Distribution is the new moat. And unlike code, it doesn't get cheaper with AI.
All right. Woo. All right. So we're seeing massive productivity output, right? And then we're seeing jobs being lost. We just saw this from Jack Dorsey and his company. I forget what the name of the name is called. No, I don't think it's Blue Sky, but it's this other thing. fired thousands of people. And he said, look, I'm
You saw the
sorry.
email. You saw the tweet. The post I shared with you, right? The guy fired like half the people. It's nuts.
That's right. And so what we're starting to see here is, this is a post from Jack. So basically, went from 10,000 people to just under 6,000. So he fired 4,000 people, and he's like, "Look, we got to integrate AI. We have to use intelligence as a means, and there's no point in us spending a bunch of money on labor because we can get so much more productivity out of this. The people who are left, the hidden word is work harder, use these tools, get better. But what does that mean for, and wait for it, passive investment flows?
Okay.
These AI tools are not generating any additional income that turns into an automatic investment into markets. The labor market, what happens is that people are putting money in their 401k, they're putting money into Vanguard funds, they're putting money on the side. So every week, every 2 weeks, every month they get their paycheck, they're putting money directly into the stock market. And they're putting it in sight unseen. They're just buying the thing, which means they're buying indiscriminately. Well, what happens when you have a flow of funds coming into any market buying indiscriminately? The price of those assets go up because there's no reason for them to go down, right? Normally, if you don't have that, and some stocks $100, you have some active money manager who goes, "Oh, I think that my cash flow model suggests that this stock should really be $90. So I'm going to wait till it comes down over there, and then I'm going to deploy my capital." And that doesn't happen with passive investment flows. A dollar comes in, a dollar buys the market. A dollar comes in, a dollar buys the market. And so you have these price dislocation that goes up and up and up and up and up. And the performances go up and up and up and up and up. Well, what happens when the performances of the automatic person completely outpaces the guy who's sitting on the sidelines waiting for what he thinks is a good price for the stock? Well, he gets beaten. And if he gets beaten, then people fire him and they take that money and they put it in the market in passive investment flows, which causes the performance to go even higher. And the people who are on the sidelines, they get pulled in again and again and again. But this mechanism works the other way too, or can work the other way. We haven't seen it yet. So this is since 2012 is when the passive investment flows beat out the active investors. So we haven't seen a cycle where unemployment turns down enough that passive flow stops, like stops, and those people have to sell their assets. They have to call Vanguard, they have to call their passive investment thing, they have to go into the brokerage account and they have to just hit sell, not waiting for a dip, not waiting for a rally. They need that money right now. So they sell, boom. And it's a chain reaction. Once they start selling, other people go, shoot, I better start selling. I didn't know the market was going to be down 20%. Then they sell. Now it's down 30%. Oh my God, 30%. Now I got to sell. Now it's down 50%. You can have that reflexive loop down the other way. So what if that's what's secretly happening behind the scenes? That we're not noticing it because the productivity numbers are still high. We're not noticing it because the wages that the people who are still haven't lost their jobs because of AI, they've increased their wages because they're more productive than they were. But a bunch of people have lost their jobs because they're no longer productive. So the average number per person, wage per person, is up or stays the same or up. But really, a bunch of people lost their jobs and they're not getting them back.
That's why I'm afraid of GDP and all these numbers. It's like you can have a great number here that hides devastation that's actually happening. Productivity can keep going up for the nation.
That's right.
And yet you can have thousands of people losing their jobs on the regular.
So people use the stock market as a precursor, like a leading indicator for recession, for what's going to happen to unemployment. But they look at that because the stock market actually runs on earnings. They don't care if the employee's making more money. That doesn't make the stock go up. They care about earnings. Well, earnings will go up if they fire people.
Well, look,
The
at some
cost
point,
goes down, earnings goes up. So I think you're asking, why did NVIDIA go down? I think we have this overcast over the market that's showing up in all kinds of different places, and we're seeing Bitcoin was a leading indicator for this. Why is Bitcoin still down?
can you put up the
Then you're
NVDA
seeing
chart?
NVIDIA. Okay, and the massive AI boom is something we haven't seen in literally forever, and we've literally been flat. since August of last year? What is happening? This even looks like a top-in pattern before we fall. What's going on here? And so it could be that we're having this silent recession happening where people are losing their jobs en masse, and it's only when they start selling their stocks, they go, look, I can't survive anymore. It's been a year. It's been 2 years. I'm gonna have to start selling it. That we're going to start seeing this massive run to the downside. Could be interesting. All right.
You made me think there for a second there, Tom. Okay, but if what you're saying is true, then other things would be happening as well. Wouldn't we see discretionary purchasing going down? Wouldn't we see earnings
Already.
for Amazon or Walmart and things like that going down?
No.
Luxury goods.
Already, we've been seeing that the percentage of the population that's actually contributing to consumer goods, to this disposable income spending, that number has been shrinking. It's something like the top 10% do 70% of the purchases. So those guys aren't losing anything, right? When you're talking about the earnings for shares, there's all kinds of ways of getting your earnings up, and labor is one of the not your earnings, but your earnings. Sorry, labor is the largest line item in most companies, and so if labor's cost is going down, earnings is going to go up, right? That's why Microsoft, I think, laid off 10,000 people and the stock went up 4% or whatever it was. Like, it's not. They go, great. It's going to cost you less to make the thing. Make the thing now for less.
Right.
So that's pretty interesting.
In the chat, Sandra Azul is saying, I lost my software engineer job over a year ago thanks to AI, etc. Thank goodness for TradersPost and learning algorithmic and automated trading.
Well, yeah, I do think that trading is going to become the thing that a lot of people end up doing, especially now with agents who can trade on people's behalf. Now you're gonna be like, why? How do you not have an agent that's helping you trade? Like, it's not going to make any sense. We'll see what happens there.
Brett,
all right.
Sorry, go ahead.
So go ahead for it.
We did an interview with I'm sorry, I forget his last name here.
Steinberger.
Brett Steinberger, who kind of hinted at that a little bit. It was kind of like a mind blown moment where he was kind of thinking, oh, you know what, I shouldn't say it. The interview is going to come out next week, so we'll just watch it then. But definitely like and subscribe, because we've got 2 banger alphas interviews that Mike did that are coming up next week. Be here for that.
All right. So I want to touch on, this is a big story, but I want to touch on it. This is this is the Jane Street problem. All right. So 1 second here. Let's get to it. Let me just read this post first, just so you have the context, and then we'll see. Oh, where'd you go? Sorry, 1 more second. Let me just find this, Peter.
All right. While you find that, just taking a look at the chat.
Found
here.
it. Got it. So Akash Gupta on X talks about this. He's responding to a post from Nicolas Charrière. No. I did the wrong thing. That's the one we were just on. You can go back to looking for your thing.
Looking for my thing. Well, we had a lot of fun on Price Action Live this morning. In case you didn't know, we trade the open 4 days a week, Tuesday to Friday, 9:30 a.m. to 10:30 a.m. Eastern Standard Time. Tom, Mike, and sometimes myself trade the open using TradersPost, trading prop firm accounts, winning and losing right there in front of you. Our favorite part of that is you folks trading with us in the chat. So come and take a look at us next Tuesday if you're around and trading at that time.
All right, I'll read this quickly from Akash Gupta, who's talking about this post from Zero Hedge, where they're going over the lawsuit here from Jane Street. So let me just read this real quick. Everyone's missing the real story here. Zero Hedge is framing this as Jane Street single-handedly causing the 2022 crypto winter. This lawsuit is more surgical than that, and what it actually describes is worse. A former Terraform intern named Bryce Pratt, Terraform is the foundation around Luna, remember the big Luna collapse of 2022, working at Jane Street, created a private group chat called Bryce's Secrets with Terraform's software engineer and head of business development. That chat became a pipeline for material, non-public information about Terraform's liquidity positions, insider information.
Wow.
The May 7th, 2022 sequence took 10 minutes. At 5:54 p.m. Eastern Standard Time, Terraform quietly pulled 150 million UST from Curve's 3 pool. This is a London platform in the crypto space. So they pulled $150 million worth of liquidity. No announcement, no disclosure. Within 10 minutes, a Jane Street wallet pulled 85 million UST from the same pool. UST is the stable coin that was backing the whole Luna scheme. Largest single transaction in the pool's history. Combined 235 million UST drained before anyone outside those two firms knew anything had changed at all. The peg cracked that night. 6 days later, 40 billion was gone. Right? The peg for the stablecoin UST dropped. Well, what happens if your stablecoin, the thing that's underpinning your network, now depegs? Well, you sell it. Then on May 9th, while retail investors were watching their portfolios disintegrate in real time, Pratt messaged Duquan offering to buy Luna or Bitcoin at steeply discounted prices. Quan told him Jump Trading's co-founder Bill DeSoma should have already reached out about a fundraise. So Jane Street was front-running the collapse with one hand and offering to buy the wreckage with the other, fully aware of the financial conditions it helped create. This tells you everything about what providing liquidity actually means in crypto. The firm that allegedly used a private chat room to drain 235 million from a stablecoin pool before retail could react now generates $24 billion in trading revenue through 3 quarters of 2025. 10.1 billion in a single quarter. More than Goldman, more than JP Morgan's entire trading operation, over 10% of North America's equity volume. Lead authorized participants for the biggest Bitcoin ETFs. And this is the second lawsuit from Terraform's administrator. He already sued Jump Trading for $4 billion in December, alleging Jump inflated UST and blah, 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 blah. Duquan got 15 years in jail. Terraform paid $4.47 billion in SEC penalties. The institutions that allegedly turned a private group chat into a front-running operation are posting record profits. The question a Manhattan federal judge now gets to answer: when does market making become market taken? Whoo-wee. Doogie Howser. Some spicy stuff going on. Now, okay, this is the whole thing from before, right? This is the whole thing from before. But let me, what's happening now is that Jane Street, the self-same Jane Street, is facing allegations that they are currently manipulating the market. Currently doing so. Let me see if this is the best one to show. Give me
Look, if someone's not manipulating the market, I'd be worried. Like, what's going on? Of course, market manipulation is going on. At least that's my perspective.
All right, let's see. 1 second. I'm going to make sure this is the right one to show.
Is this like this is the beginning of the crisis we've been waiting for to bring crypto down so it can go back up?
End. Yes, exactly. This is what I think it is. This is SBF level of stuff. This is FTX level stuff.
Yeah.
Absolutely. All right, I just want to find the right one. Give me 1 second. All right, here it is. Let's... all right, 1 second.
This is exciting and kind of scary. I'm not sure what you're about to show us, so
I'm going to show you the beginning part of this video from Swan Bitcoin. All right, here we go.
Snyder filed a lawsuit against Jane Street, alleging they used insider information to front-run trades and extract profits during the Terra Luna collapse in 2022. Jane Street, for those that don't know, is one of the largest quantitative trading firms in the world. They trade everything: equities, bonds, crypto, derivatives, and they're one of the authorized participants in the Bitcoin ETF ecosystem. That means they sit in the plumbing. The lawsuit dropped, and within hours, people started connecting the dots. There was a peculiar and consistent sell pattern, 10 a.m. Eastern nearly every day, where Bitcoin would dump for months. People noticed it, but nobody had a name to attach to it until now. Then suddenly yesterday, the 10 a.m. dump stopped, right after the lawsuit. Bitcoin ripped 7% in 48 hours. Now, obviously, correlation isn't causation. Many have pointed out that the 10 a.m. pattern may not hold up under rigorous statistical analysis, but the timing was hard to ignore. And it wasn't just the sell pattern. Jane Street's 13F filing from Q4 2025 showed a 473% increase in their MSTR position. They added over 785,000 shares, bringing their total holdings up to just under 1 million shares valued at roughly $121 million. At the same time, MSTR became the most shorted stock in the world, with investors betting against Saylor amid $7 billion in unrealized Bitcoin losses. So you've got a firm accustomed to running a suppression algorithm, accumulating a massive position in the most prominent Bitcoin treasury company, while that same company is being shorted into the ground. Smells a lot like a conspiracy. Well, two camps formed immediately on Bitcoin.
All right. You guys could go take a look at that Swan Bitcoin video in order to get more information on that. But this is exactly what I've been waiting for. All right. I go, something is going to come out. I remember this from last cycle. Some Mt. Gox nonsense, some Luna thing, something is going to come out, and we're going to find out what's going on here. And we only find out when liquidity comes down. When the tide goes out, we see who is swimming without their trunks. All right. So now imagine this. I love being a barnacle on the side of some big whale. Jane Street's doing this thing. All right. So imagine, I could imagine a few other people who are not Jane Street are also doing this. They're all part of this thing or whatever. Bring the price of Bitcoin down. But you heard what he was saying. The idea is that while that's happening, they're accumulating crypto and they're accumulating a position in MSTR. Well, why would you accumulate tens of millions, $100 million worth of an asset unless you had some expectation that it was going to go up pretty dramatically? Why would you be doing this? Why would you be engineering the sell-off if you are allegedly engineering a sell-off? Well, if they know that once they're done, once the market goes back up, it will make it all worthwhile. Now, Peter, you've heard me talk about the super negative, the negative gamma spirit bomb, right? The negative gamma spirit bomb. What have I talked about? What happens if negative gamma, which is when market makers become forced buyers or forced sellers of an asset, what if the entire crypto market turns and everyone becomes, or a large number of people become forced buyers of Bitcoin? Well, that will make Bitcoin just absolutely skyrocket. So let's say you're one of those people and you think that Bitcoin should have been at $150,000.
Right.
And we're suppressed.
Uh-huh.
Well, once that suppression ends, not only do you get a massive rally, the speed of that rally would be insane. Well, what happens to the calls during that rally? The calls go up massively in value. Massively in value. If they're naked calls, that means someone's on the other side of that and they got to go and buy Bitcoin in the market in order to sell it to you.
Mm-hmm.
That causes the price to go up even further. If it's market makers who have to delta hedge their positions, then they got to delta hedge a lot because it's going up really quickly. Who knows how far it goes? They got to have the delta hedge immediately a lot, automatically. Then all the people who are FOMO'd into it. Oh my God, Bitcoin could pass 150 and skyrocket to 300 before you know it, and a thing like that. What will happen to MSTR? MSTR would go from where it is right now. I can't remember where is MSTR right now. Let's go take a look at our little boy.
Emperor Sailor is what will happen.
For sure. MSTR right now is at 129. We take a look at the daily. Whoo boy. Okay, so peak to trough, it's like down 75%. All right. Let's just run the experiment, Peter. Let's just run the experiment. If let's call it within the year, if by December of this year, MSTR goes above 541. Let's say it gets released, the Kraken gets unleashed, and we just explode up. Let's just go take a look at that. Let's go to the options calculator. Actually, let me just go to my Sacred Profit dashboard. Actually, no, let's go to options calculator. Let's go long call, just for funsies, Peter. Just for funsies. MSTR. Let's say we're going to buy a call for, let's call it January 2028. Why not, guys? January 2028, and let's call it all-time highs 550.
Let's
call it 550.
Add at the bottom right.
So it'd be 550. It would cost us $1,600 for that. And let's see what that would be. Let's just see. I don't know. Let's see. By December, if that happens, 550. Let's call it over here. Okay, at 550, you double your money. at 660, you make 6 times your money. And if it skyrockets like we saw before, let's go to logarithmic. What would it be? All right, if we do this log trend, so we have this, we have this. Let's just take a look, guys. We're just looking just for funsies. It would get up to 2027 here. It would be 1300. Let's say if we're just going with the crappy technical analysis, 1300. We don't even have that on the chart here. That same amount in December would yield 1300, 46 times your money.
Only?
$1,600 would make you $76,000 if this was true. At the high end, at the upper end. On the low end, you probably just make 7 times your money. So imagine $100 million. What that could turn into if there's any call options in there. Imagine what that could turn into.
Well, I mean, does the U.S. government still own Bitcoin? I mean, what are they doing?
Who knows such things, Peter? Only the Oracle.
It's a fascinating story. So Michael Saylor aside, we have these allegations of market manipulation. To me, the likelihood that someone is doing something fishy in the market is pretty high, especially in the crypto space, but we never know for sure. If it does happen, come crunch time, what's the time frame we're looking at here? When do you think the bubble, when do you think the shoe will drop?
Oh, I mean, I think Bitcoin bottoms between 50,000, 55,000, 56,000. That's where I would personally be buying.
Mhm.
And I might expect it to go much lower than that. If it does, great.
Or what time
Because
frame
when it
are we
gets-
looking at?
But between now and next October, I think between now and August, but we'll see. Definitely within the next few months.
All right. Folks, the world is changing. AI, crypto, apparently, and so much more. You've got to get moving. This is your opportunity. This is the chance. This is the time. You don't know what the future is going to look like 5 years from now. You don't know what the future is going to look like 10 years from now. You have to start assuming that things are going to change. Look, could everything just stay the same and things are roughly the same and people get there and you go, oh, there was a lot of hype and it didn't matter? Sure, that could happen. But that's not the smart move. The smart move is to assume change will come, and position yourself for success. Ray Kurzweil taught us this when he became 80% successful at his predictions for inventions. He realized you've got to build your things for the future that will exist when your invention is complete. Start building, think big, and prepare yourself for a radical change. And here at TradersPost, we can help you do that by getting you introduced to the markets. If you don't know, start knowing. If you already know about the market, start practicing and doing more than ever before. Like Tom says, you need a strategy. You need something automated that's happening on your side. You need AI on your side. Tom, we talk about it as having a clanker, having your own C3PO or something on your side, okay? The war is happening and you need AI on your side. Engage with the tools that are available to you. TradersPost is one of those tools. And of course, have fun along the way. Whew. Let's see what's happening in the chat here. Michael Scott says, "Love your show, love you guys. Tom, you've to make a video or two and show us how to use OpenBox and set it up for backtesting trading strategies and trade them."
OpenBot, yeah,
OpenBot.
Absolutely. I'm happy to do that. Let me.
Thank you for that, Michael. I didn't even know about OpenBot. I'll take that out. Are you familiar with OpenBot, Tom?
Yes.
Awesome. All right, Trey says, "Gotta catch the train home. See you guys next week." Thank you, Trey. We're signing
Trey.
off here. Trey says, "Price Action Live. It's the best party going on at 9:30 a.m." Oh, thank you. So swell, so nice.
Damn straight.
Tom, we got anything else before we shut this thing off?
Nope. Looking forward to seeing you guys next week. And until then, we wish you, as always, happy trading.